price. But in the meantime, Julian's health is back.
Welcome to the Cryptocurrency Odyssey Show. The Cryptocurrency Odyssey Show highlights the latest news on cryptocurrency, blockchain technology, disruptive technology, economics, and world events. They interview top thinkers and entrepreneurs in the industry, and they cover topics like Bitcoin, technology developments, investing, trading, and ICOs. As our world keeps getting more and more digital, cryptocurrencies are changing along with it. Okay, audience, here's the host of Cryptocurrency Odyssey, Matt Leach.
Welcome back, listeners. Today's show is an update to our show about strategies for cryptocurrency and the strategies you can use to make money with cryptocurrency. And all of this put together means what it could mean for you. We're going to talk about the complexity of working with strategies in order to get us all more educated about this activity for cryptocurrency. Now, my co-host today is Noah Leach, our current expert on this subject, and he will be helping me educate all of us about it. Hi, Noah. How are you doing?
I'm good.
Well, good. Right now, I've got a quick description of what a strategy is and how it'll function in the cryptocurrency network and how you can use it to make some money. So without turning it into a big to-do, let's get started. The show is an attempt to bring some light into the area of funding your account in cryptocurrency and how to avoid pitfalls like we've seen in the cryptocurrency market as of late. And there's a lot of those pitfall type things happening. We've also adapted the content because we've been asked for more current strategy information with questions like, what should I do? That kind of thing. So today we'll have a look at how, as a user of crypto exchanges, cryptocurrency could be an economic path to freedom for you. But first, a quick review here. One of the things that you need to do as far as strategies go is know that you have the resources to weather a crisis. And some people panic in a bear market because they don't know whether they're having enough cash to handle near-term goals, which the Schwab Center for Financial Research says, ideally you won't have to face this question in a crisis because you should know the answer. And that's what the strategy is all about. If you're retired, knowing that you have the next 12 months of living expenses in a bank account or money market fund and a few more years worth in bonds that mature when you need the money, that can help you, stay calm. It's when the wolf is at the door, you're hoping he has puppies so you can sell them all. But anyway, so you're going to react a lot differently than someone who gets blindsided and has never laid that groundwork. And so that's what this show is all about. So I want to move on and let's find out what Noah thinks about this. Noah, first question here is, what strategies can you employ to stop yourself from losing too much money on cryptocurrency gains?
Well, just like on the stock market, you can do something that's called a stop loss. And that's just something that you set when you first buy your cryptocurrency or your stocks or bonds or whatever it is you're buying, whatever security you're going to be buying, you can do this. All right. So a stop loss is exactly what it sounds like. It's you set the price for when it activates. So like, let's say for this example, you buy some crypto, and then when you buy that crypto, your whoever you buy it through, whatever exchange you buy it through, will usually be set up kind of similar to like a stockbroker's buying. You can set your stop loss, you can set your profit where you want to sell it at, what point you want to sell it at. So like, let's say you bought it for $1 and you want to sell it for $2, you can set all that. But let's say you want to stop yourself from losing too much money, you can set the sell price at 95 cents if it were to go the opposite direction. That way you're only losing 5 cents for each coin you own or something like that. You might lose a little bit of money, but the chances of it rebounding to over $1 again at that price level is still kind of high, little fluctuations in the market can, you don't want to set it too, you don't want to set stop losses too close to your buy price, because fluctuations in the market can activate that stop loss and you could end up losing out on gains. So knowing where to set your stop loss at is kind of a give and take and an experience thing. A lot of people like to do it at about 10% of what they paid. So, like if you paid $1 for a coin, you set it at 10% below the price. So you set it at like 90 cents, or if you only want to make like 10 cents per coin, you'd set your sell price at $1.10, and that way you have it all set up and ready for you to go. And that helps stop you from losing money. And then you can hit your targets of making your money too, all at the same time. And that's a great way to ensure that you don't lose too much money. It's also a great way to ensure that you keep gains, but then you got to look at it, and this is something that day traders do. So, you got to look at it as any gains that you make are good. So if you're looking to make 10% on your money within like whatever time frame, and you set your sell price already when you buy the coin, then you don't have to worry about it, and then you want to do what's called a GTC, which is a good till canceled, which is usually, it's not actually good till canceled. It's usually just keeps your buy price and your sell price for 60 days. So, then you don't have to worry about it for 60 days. And then you can just go about doing whatever other trade you're doing, et cetera, et cetera.
So that's kind of a way to match your money to your goals.
Yeah, that way stop losses are exactly what they sound like, and profit, I forget what they call the profit side of it. You got your stop loss, I guess, profit loss. I don't know.
Okay.
But
okay.
yeah, you if you set those the right way, depending on what your goals are, and before you buy a stock, you should be looking, or buying a crypto, you should be looking at like the white paper or whatever. For stocks, you'd be looking at the financials of the company and stuff like that. You want to see what's going on with that company before you buy into it.
Well, definitely. You want to, especially, I think reading the white paper is more important in crypto than actually going into the stock portfolio for a stock and reading what they say in there.
Well, it's pretty much all the same in terms, of like when you're looking at, for stocks, when you're looking at stocks, you want to make sure that company's profitable. And the number one driver of stock prices is how much revenue that company's bringing in, their total revenue. It doesn't matter what their net revenue is after expenses and everything. It only matters about their gross revenue. So like if a company's bringing in $3 billion a year, or sorry, a quarter in revenue, that company's stock price, if it's low, if it's like $2 or $3 or $4 or $5 or something like that, companies like that are companies that you want to buy into, because when they have high revenue generation like that, and their net revenue is still positive and not negative, that's a good company to go with. And generally, even companies with like high revenue streams and low net income are even if it's negative, are still good companies to invest in, because especially if their revenue stream is like 100% year over year, every quarter, you're looking at a good company that's eventually going to become profitable. Even companies that are already profitable from the get-go, and to have low revenue streams, as long as they're profitable, are still good companies to invest in as well, in my opinion. And as always, this isn't financial advice. Let's just get that out of the way too.
Right. Now, the way I've been seeing during my research is that bull markets tend to run for an average of about 6 years, and then we turn down, and like we're in right now, we're in a bear market, because the bull market kind of ran out, and but bull downturns don't last. Okay.
Yeah, it's a cycle.
It's a big
every
cycle.
few years you got your cycle or your bubble pops or whatever you want to call it,
Mm-hmm.
and things like that happen. I think that the market's current state was accelerated due to Russia's actions, but
Yeah, I have to
I think
agree
we'd
with
be
that.
where we were anyways or close to it, even without Russia doing what they did, which messed up the entire world economy because everybody wants to sanction Russia, and then Russia wants to be like, well, I'm not going to give you any of my oil. So, yeah, that messed up a whole bunch of stuff, but,
So a bear market generally will last about 2 years, roughly, somewhere between 1.5 and 2 years. And so with let's see, with the fact that Russia has affected the world market so much with their invasion and all the things that came with that, do you think that'll cause this bear market that we're talking about to be extended at all?
no, I don't think so. I think as soon as Russia realizes that they've messed up big, they'll probably once they pull out of like Ukraine and everything goes back to normal, I think that will be back to a bull market within a couple of months, maybe a few months.
Like what's few months being 6 months?
Maybe, yeah. I mean,
Something like that.
but it depends on what Russia decides to do. And the only reason that is because of the oil that they control, the amount of oil that they control. So, if they didn't control any of that oil, it wouldn't really matter because that's what caused everything to start going out. I mean, of course, COVID helped that quite a bit, especially with all the supply constraints that we've had. But after COVID and then Russia doing that pretty much immediately after COVID is finished, as they like to call it, or, we've normalized COVID now and gotten around it, so to speak. I think that that's what led us into where we're at now in terms of cryptocurrency assets as well as the stock markets. Everybody got scared. So
I heard that Russia has now reestablished the natural gas line. I guess they had shut that down. They called it for maintenance during the war.
Right, sure,
but,
yeah, maintenance.
But
yeah,
it was the fact that I guess Germany and the other European countries had quit buying their natural gas, so they turned it off, and they called it maintenance, and they were doing some work on the pipeline, supposedly. So now they've turned that back on. So we should see a drop in natural gas, the price, I would think, because now there's more supply, and the demand was always high, but now the supply is back on. So that being a positive thing is maybe Russia's finally seeing the light that they're not going to win this one, because basically the whole world is against it. And when you have countries that can't afford to fight a war, but they're still sending your opponent planes and ships and missiles and stuff like that, I guess it should give you the idea that you're not going to win.
right.
And so that's kind of where I was at with that. Is now that it has the worm turned now, type of thing, because they've now started resupplying the natural gas. So will they start resupplying the oil now?
I don't know. That's going to be up to Russia. I'm not going to speculate on that.
Yeah. Well, that's I think they've started, like you were saying, that they're learning, I guess.
Slowly.
About it slowly, yeah. Now, one of the things that I was wondering too is how diversified should a portfolio be?
As diversified as the person that holds it. It depends on their long-term or short-term goals. I mean, like we were talking last week about strategies for cryptos that run together, and same thing with stocks. You can get that strategy as a decent strategy for starting, because you can go to like Coinbase or whatever, and you can look up what cryptocurrencies tend to move together, meaning that they move up or they move down together. And if you're diversifying your portfolio in that way, then you have a better chance of getting higher gains out of multiple different cryptos instead of just dumping all your stuff into one. Now, cryptocurrencies aren't like businesses to where you can just be like, oh, well, this cryptocurrency's $9 billion, has a $9 billion market cap. So, that's probably a good one to go for. Now, with cryptocurrencies, you aren't looking for their market capitalization or how much revenue they bring in. You're more looking for sentiment on that coin. Because what you want to do is you want to see what people's reactions are to that coin. Now, a lot of people will be like, oh, this is the best coin ever or anything like that. But you have to look at what that coin is also trying to accomplish. Like, I just started playing a game just today, in fact, called Earth from Another Sun. And guess what that game
Earth
does.
from Another Sun.
Yeah, it's kind of like a strategy, or real-time strategy slash first-person shooters slash empire building game type thing that they're trying to mash like 3 different genres together to try and make a game. And I only got to play for like 20 minutes before we came in here, but I was like, it's not too bad. But something I didn't know about it is that it's based off of the Solana blockchain.
Okay.
So that right there, I'd be like, well, it has like 15,000 players right now. It's in early access, and I bought a support pack for it, to gain access to the early access. And I was like, $50, that ain't bad to play a video game. That's about similar for, what you'd play for a video game that is already out. So I didn't mind buying that. There's cheaper packs for people too. There's like a $30 pack too, I think, and then there's way more expensive ones. And I was like, nah, I'm not gonna get that. I'll buy the $50 one and we'll see what it's like. And they have a 2-week refund policy, no matter what, no questions asked. So I was like, hey, you know what? That sounds pretty good to me. But I didn't know that it was on the Solana blockchain. And I'm like, I heard about games getting on the blockchain for Solana, but I didn't. I never looked into it too much because I figured it'd be years before anything like that comes out. But nah, here we are with a video game right there, and I'm like, well, shoot, I might have to look and see what Solana's price is here pretty soon and buy some more coins.
That's something that I have thought about with all the different blockchains out here, which that are available, not out here, but that are available. Are there any that are more suited to games than others? Do we need a blockchain specifically for games?
Well, I think that's what the Metaverse is supposed to be doing, so I think Solana's part of them as well. I think Shiba is too, and there's like a couple of other big cryptocurrencies that are into the Metaverse for gaming, and I think I can't remember exactly what we said about because we talked about it in one of our earlier shows, like about 3 months ago. But anyways, the Metaverse is specifically designed for games, pretty much, And so I know that like Shiba Inu, their ecosystem, they're doing their own little Metaverse type thing too, and as you play games, it's supposed to burn coins, It's supposed to up the burn rate and stuff like that. So that way you're burning coins, you're pretty much playing games and having fun to improve the blockchain for whichever coin that blockchain or whichever coin that game supports,
Okay, so is that all part of Web3 that I keep reading about?
I think Web3 is newer than that because the Metaverse thing came out like a year ago, and I'm not sure how new Web3 is. I think it might be, it might not be, but
Well, there seems to be a lot of confusion on that.
Yeah.
Is whether Metaverse and Web3 are the same or are they dependent on each other?
Yeah, I don't know. I'll have to look it up.
Do you know much about Web3 at all? No. Okay. Well, maybe that's a show we should put on. Is Web3 and the Metaverse.
Yeah.
And I know there's a lot of interest in that. In fact, maybe we'll do that next week or the week after. Whatever works out in our busy schedules. Now, it's easy to say that risk doesn't bother you when the market is like at all-time highs, okay? But a better indicator is how you behave in the last downturn, when we're in the bear market. And I think that the behavior in this bear market is been really bad. It's just not as good as it should be. And a lot of investors sold at the bottom of the market when this happened in 2009, turning temporary paper losses into real wealth-crushing losses. And do you remember that at all? I mean, that's only been 11, 12, 13 years.
A little bit, but I wasn't too into crypto at the time. The only one I was really watching was Bitcoin back in 2009, 2010. And
Okay.
if I could have bought a 100 Bitcoin for $10 back when it was like, I would have, but I didn't have the means. And then buying the Bitcoin, it was so new that it was so difficult to try and buy it. The exchanges really didn't exist,
Right. They
And
didn't exist yet.
It was just like, to me, it was super sketchy. And I was like, well, people are saying that this could be the next big thing. And they were kind of right, I mean, hindsight's always 20/20, but when I was looking up how to buy coins back in 2009, 2010 for Bitcoin, they were like a penny a pop or something like that. And I was like, well, shoot, I mean, I could hold on to that for a few years. $10 or $20 or $100 ain't gonna break the bank, but looking up how to buy it and stuff, it was so difficult. So I was like, forget it. I thought it might be easier to mine coins, but no, that's even more intensive.
Well, on the other hand, I was watching a show from Robert Kiyosaki. You remember him, right? Rich Dad, Poor Dad.
Yeah.
Okay. Well, he has his own radio show. He has joined us, or we've joined him, something like that. So he had a guest on there this morning that said by 2030 he's expecting Bitcoin to go to 17.5 million per coin.
Nah.
What do you think of that?
I don't know. That seems kind of
High?
yeah, unless unless there's only like a few thousand coins, I don't see that ever happening, I mean, there's only ever going to be so many Bitcoins in circulation, and they're almost at that max right now of like, what is it, 22 or 23 million coins
20,
or something?
okay, I thought it was 21 million, but
I mean,
it could be
if that
22,
were true, then, taking out taking out like a loan or something, I don't see why somebody wouldn't do that, just to buy one coin.
yeah.
Just so that way, by 2030 it's going to be something and I'm going to be a millionaire. Who cares if I have to go bankrupt between now and then because I don't pay back that $20,000 loan? But then, they take that, they'll take all your assets anyways,
Sure.
if you do that.
So,
but I think it's more plausible that by 2030 Bitcoin will hit 100 grand. I think that's a more plausible thing, but
you think 100? Yeah.
yeah,
Okay.
I think 100 grand is probably doable, but I wouldn't be investing in Bitcoin hoping that happens, because that's what they would call hopium, I believe.
Hopium?
Yeah, where
Okay. As in opium with an
Yeah.
H? Okay. That's interesting.
getting high off the hopium.
Yeah, high off the hopium. That's I'll have to remember that one. And what I need to do here, guys, is I want to go to our station identifier so that you remember where you heard all this stuff. We want you to come back. So a quick reminder, you're listening to Cryptocurrency Odyssey, and we air live weekly on KWRH 92.9 FM. Write that down. On Fridays at 10 a.m. in St. Louis, and St. Louis, Missouri, that is, and nationwide on Zeno.fm with your city. You can go to Zeno.fm /Detroit, and you can pick it up locally in Detroit. Monday to Friday at 11 a.m. and 4 p.m. is when we'll be on. If you like what you hear, of course, and you'd like to sponsor us, please call and let's talk. It's a free consultation. You can also contact us on YouTube. Just search for Cryptocurrency Odyssey, and then subscribe and like our videos, and that's all there is to it. When there's a new video appearing on YouTube, you will get a text or an email that it's up there, so you can go watch it. Now, also, we have a new coin that you can mine with an Android phone, and this is a great way for beginners to get started with cryptocurrency because it's free. You get the coins at a low price. They're already on an exchange, and then you just hold on to them. And you can follow this particular coin through its travels in the cryptocurrency market to see how things affect it. The coin is a special one called Loop. It's on the Loop network. It has its own blockchain, and you can download it free, work it for a year. It's on the Bitmart exchange, if you're familiar with that one. You can call or text us at 314-283-1969. And actually, I prefer text. So text me. I'll send you the link for that coin, and you can get started. You can also email me at mlcryptodude@gmail.com, and I'll email you the link. So that's our station identifier for today. We'll keep that going, and we're coming up on our break period here in about 3 minutes. But I will move on here to the next question, and we'll see what we can, how far we can get. So, how do you identify companies that are good crypto assets? You know, like that are going to be a better asset as time goes along.
Well, I mean, you just got to do your research, on these cryptos. You can't sit there and just expect one crypto to get you through to if you're trying to get life-changing money, and a lot of people, when they say, "Oh, I want life-changing money," they're thinking like millions of dollars, but you should set your goals just a little bit smaller.
Really?
Like life-changing money for most people would be enough to pay off their house or pay off all their debt. That way they're debt-free and they aren't running from paycheck to paycheck, And if you don't have to run from paycheck to paycheck, then you're already building wealth every week you get paid.
Correct, yeah.
So you should be focusing on that first. Make enough money to pay off your debt, and that's it. And then from there on, you can work on your portfolio, So trying to find out what companies to invest or what coins to invest in is just down to your what you need, what your goals are. Like Bitcoin's obviously a good one to invest in, but you got to have money to already invest in it. You can buy fractions of it, sure, but fractions of it only make you so much money. While one Bitcoin would make you more, but if you can't afford the full Bitcoin, you might as well just buy what you can afford with your cash, not somebody else's cash. So don't take out loans.
Mm-hmm. Okay, listeners, we're coming into break time, and we want you to come on back after we're done with the break. So stick around. Come on back in about 5 minutes when the break's over, and we'll talk some more about cryptocurrency.
Commercial Energy Consultants is a 10-year-old company focusing on middle to large commercial accounts. CEC offers these companies services by lowering their electric and natural gas rates. They don't charge for this service, and they've got over 9,500 happy clients with over 1 billion kilowatt therms under contract. What makes them different is their reverse auction. CEC offers a way to have available suppliers in 17 states bid openly for energy business. Why, their mission is clear. bring their clients the low bid for their energy consumption. In fact, because of their competitive auctions, energy consumers would be well advised to consult with CEC first. Why pay more for the exact same power? For more information, contact Mike Grimes, CEO of Commercial Energy Consultants at 1-877-212-1400. That's 877-212-1400.
Hey, listeners, saying thanks to your customers is nice and polite, but expressing your gratitude in memorable and ongoing ways can boost your business. At Promo Experts LLC, we exceed our customers' expectations. For over 20 years, our product knowledge and experience has helped them with their marketing initiatives and trade show graphics. We are happy to put that experience to work for you. Quality products, great customer service, and prices are our #1 priority. We work with you to find unique, creative, and new ideas that fit your image and expectations, helping you build strong relationships with your customers. When you select Promo Experts as your marketing partner, we help you to see more than the big picture. For more information about this exciting opportunity, contact Diane Carson, President, at 636-458-5241. That's 636-458-5241. Let Promo Experts help you to move your business brand beyond the bland.
Attention! Here are 5 things that you can do to avoid coronavirus scams based on the Federal Trade Commission guidelines. Number 1, do not respond to text messages, emails, or calls about checks from the government. The government never sends emails requiring that you do anything. Number 2, ignore online offers for vaccinations and home test kits. Number 3, hang up on robocalls. Scammers are using illegal robocalls to pitch everything from low-priced health insurance to work-at-home schemes. Number 4, watch for emails claiming to be from the CDC or the WHO. Use sites like coronavirus.gov or usa.gov/coronavirus to get the latest information. And don't click on links from sources that you don't know. Number 5, do your homework when it comes to donations. Never donate in cash, by gift card, or by wiring money. For more information to help you be prepared, contact Tony Zifilopoulos. He's a 25-year IT professional with the last 6 years specializing in cybersecurity. Tony is a certified information specialist auditor, and he will review your cybersecurity. Tony can be reached at 314-504-3974. That's 314-504-3974. And email TonyZ@fixvirus.com. His website is www.fixvirus.com.
Have you always wanted to write your own book but don't know where to start? Publishing Concepts, a publishing company located right here in St. Louis, offers everything from consulting, book printing, copyrights, ISBNs and barcodes, print book layout, ebook and iBook layout, graphic design, cover design, ghostwriting, typing and editing, distribution, marketing, and more for an affordable price. Visit publishingconceptsllc.com or just Google Publishing Concepts to get started today, or call 314-781-8880. That's 314-781-8880. Publishing Concepts. We help you sell more books.
How would you like to get cryptocurrency free on the Cryptocurrency Odyssey radio show? Loop Network is crypto money based on a mobile-based system that brings a different perspective to the crypto industry. The mining experience is playful and straightforward, making it easy for everyone, regardless of background or previous knowledge of the LN industry, to be able to earn LN just by tapping a button on your phone. The best part of the concept is that it's entirely free to get started and mine LN. Just download the app. The Loop Network app will allow you to start withdrawing mine coins from the 1st of June 2023 and provide a secure system for players to make transactions and see your balance transactions history, where transactions of your LN coins can be monitored. To sign up for this free offer and join the crypto world today, call or text Matt Leach at 314-283-1969. That's 314-283-1969.
Hi, listeners. We're back. We're back to identifying companies that are good crypto assets. We were talking with Noah about that before the break, and I wanted to kind of talk about how can we decide whether a stock or a cryptocurrency is actually fairly valued. You know, I mean, when they say that this stock or this crypto is worth $1, how do you know that?
I mean, it's all for cryptocurrencies. It's mostly based off of sentiment and trading volume.
Okay.
So, you know, if it has high trading volume, which is usually the amount of coins that are being exchanged daily, you know, just like in stocks, the trading volume isn't how many people are buying, it's how many people are buying and selling. So, you know, that's just the average daily volume that it does. Like, and as that volume increases over the course of the day, the stock either goes up or it goes down, or the cryptocurrency price goes up, it goes down, you know, and you can see that on websites like Coinbase, or you can see that on coinmarketcap.com or whatever.
Mm-hmm.
And you can see the amount of people who are buying and the amount of people who are selling, well, in percentage wise anyways.
Mm-hmm.
So, you know, you can't see the actual people doing it, but
Right.
yeah, in percentage wise, you can see like 90% buy, 10% sell. So there's a good chance that if 90% of the people that are buying that are buying and only 10% are selling, then the turnover rate is really low, meaning that the price of that crypto should go up quite a bit, you know, depending on, you know, how much money is being thrown at it at that particular moment. So with that knowledge, you can better decide what to invest in. But once again, you should always be reading the white paper, reading up on those coins before you ever dump money into them. Like, you know, I read up on SafeMoon quite a bit before I bought into it, and now it looks like I'm going to get burned pretty good on it. So that's one investment where I've lost pretty much $1,000, and I'm like, well, you know, I mean, that's why I'm using cash and not taking out loans, because it's cash that I already have on hand. You know, I don't have to worry if I lose it. Well, it's gone. You know, I haven't sold any, and I'm hoping that it turns around, and I'm just going to let it sit for a few years and forget about it. But at this moment, down pretty much like 80% or something like that, and it's easy to blame companies or the people that run the crypto or whatever, but at the end of the day, when you're down on a certain cryptocurrency or you're down on a stock, that's on you for not doing your investment or doing your due diligence, your research, whatever you want to call it. And, you know, I always try to avoid blaming other people for my mistakes, because then how am I as a trader or a investor supposed to grow my knowledge if it's always somebody else's fault? You know, because that's an easy takeaway, is that it's easy for people to say, well, that's not my fault that it went down. They're the ones that did something wrong. Why am I being punished for it? You know, like the people with Voyager and stuff like that, you know. When you invest in a company and that company claims to be FDIC insured, you should be looking up if they're actually FDIC insured.
Correct.
You know, that's on those people for not doing their due diligence. They dump money into Voyager thinking that it was going to make them a lot more money. And, you know, a lot of people might say, oh, well, you know, I invested in them because it said it was FDIC insured. Well, that's on you for not doing your due diligence. It's not on them for falsely advertising that they were. It's on you for not making sure that that's truly what was going on, you know. And like a lot of people, they'll say, yeah, you know, that's on the company, you know. And yeah, with SafeMoon, in my opinion, yeah, it's on the company for what they're doing because they're now being sued or something like that, the last time I heard, because of some actions that they took to make sure that SafeMoon didn't hit rock bottom. or that they had taken out some money or something like that, you know, and that's why the price of Safe Moon has gone down drastically and why everybody's pretty much red on that. But at the same time, I should have done more of my due diligence and found out who these people were. You know, I should have really dug deep instead of just reading the white paper and, you know, gauging sentiment, because when I bought in, it's been over a year now, and sentiment was quite different than it is today. And, you know, I mean, you can't predict how things are going to go, but at the same time, you should really dig deep to find out who these people are, especially if you don't have a whole lot of money to lose. So, you know, I'm probably going to end up getting burned on that, and I've already accepted that fact before I bought the coin, you know. I was hoping that wouldn't happen, as most people do, but it happens. And, you know, there isn't much you can do about it. You know, I mean, I could go out there and be like, oh, well, I'm going to sue for my $1,000 back or whatever, but that's going to ultimately cost more money than it would be worth to get the money back, and then you'll end up owing some lawyer money anyway, so you might as well just say, okay, well, I put the money in that I was willing to lose and I lost it, so time to move on. Time to move on and see if I can't find something else that's going to make me more money.
Time to move on. That seems to be a big part of life.
Yeah, and with like stocks and stuff, it's easier to find companies that are worth investing in, because like on the NASDAQ and New York Stock Exchange and stuff like that, they have requirements, right?
Right.
You know, you got to disclose how much money you're making quarterly. You got to disclose your expenses, your total income, your net income, all that jazz, you know? So you can really dig deep into these companies. Unlike with cryptocurrency, you can only dig as deep as pretty much the company's wanting to put out the information, you know? Of course, they try to put out as much as possible, but as we've seen recently with what's going on in the crypto market right now, a lot of those companies were either falsely advertising something that they actually didn't have, like FDIC insurance, or they were not being completely truthful with where their money was coming from or what they were doing with their money. And that is a huge problem for those companies and their investors.
Yeah, the cryptocurrency market has been likened to the Wild West. You know, everybody's just out there shooting.
Yeah, I think that the cryptocurrency is more like the OTC market with even less regulation than that, you know, because you got your over-the-counter market, which is pretty much like penny stocks and stuff like that, stuff that can't get listed on the NASDAQ or stuff that can't get listed on the New York Stock Exchange because they can't keep their price above a certain, or the price of their stock above a certain level. And, you know, there's a lot of people out there that trade on the OTC market. And if you do that, it's a great way to make quick and easy gains, but it's also extremely volatile. But if you've traded successfully on the crypto market, you'd probably do okay on the OTC market, because, you know, but finding a broker to do OTC, or as they call them, pink sheets too, it's difficult, because those trades don't get traded as quickly as like on the NASDAQ or something like that, because they're most brokers are literally having to put your order in. They can't put an order in over the online, as far as I know. They have to put it in on paper, and then that's why it's called over the counter. And then they slide it over the counter to whoever, and then the order gets placed.
Oh, really? They have to fill out an actual order form, huh?
Yeah, I believe so. It's just, as far as I know, it's just some little pink sheet. You know, it's.
And they don't make as much money on it either.
No,
because the numbers are smaller.
Yeah, well, you know, like when you're looking at penny stocks and stuff like that, you know, like 1 cent, 2 cents, and then you're seeing that they're going up 100% today. Okay, well, I bought 10,000 shares of that, which is like $100. It went up 100% today, so now I've made $200. Well, let's go ahead and sell that real quick. Oh, well, before the order got in, it's now down to $50, so now I'm negative $50 or whatever.
Okay,
you know?
okay.
So that's the risk you run.
I think I've been
playing
there.
on the OTC market, and a lot of traders do it because it's an easy way to make daily income, but it's also extremely volatile. You know, like you can still do penny stocks on the NASDAQ, which are stocks between $1 and $5, but obviously you aren't going to be buying 10,000 shares on the NASDAQ of $5 stocks or $1 stocks, because then you'd have 10 grand. And why would you buy a $1 stock, 10,000 shares of that, when you can go buy a $5 stock or a $10 stock and possibly make more money?
Well, that's a good idea. Yeah.
And
good point.
There's a lot of ways there's only a couple ways to make money on the crypto market, like you got ETFs, and then you got your investing in coins and stuff like that, which I'm not very like bullish on doing like the ETFs or anything like that, which are just, they're like funds, where they hold a bunch of other different cryptos, and you can and as those cryptos go up, if you invested in that fund, you get a little bit of that.
Well, that's
gain.
kind of an ETF crypto fund. That almost sounds like an exchange.
Well, no, not really, because on the what is it? On the NASDAQ, they have a Metaverse fund, and that Metaverse fund hosts like 5 or 6 different cryptos. So if you were to invest in that, every time the Metaverse fund goes up in price, you'd get a little bit of that action. You know what I'm saying?
Right.
So like as all those cryptos that are slammed into one fund gain or lose, you gain or lose with it.
Right.
But the gains and losses are spread across multiple people versus being spread across you.
Mm-hmm. Oh,
So,
yeah.
if it goes up 10%, you'll see a 10% gain, but it won't be what you think it'll be, because, it'll be like if you bought one share of Metaverse at, say, $100, and then it goes up 10%, and that's, how much is, so you get $1, you might see, depending on how many people invested in that, as far as I know. I also don't do them, that if I'm wrong, that, but I imagine that's how it is, because it's a fund, that's designed to pretty much gather money and make the one person that controls the fund rich, while everybody else just kind of
the hedge
money
fund
slowly.
manager.
Yeah.
He's the guy that gets rich.
Yeah.
That's
Kind of like a pyramid or something,
Yeah.
That's how I look at ETFs, but I don't do them. I'd rather invest in stocks, calls, and puts and stuff like that on the stock market, which, there's way more opportunity on the stock market than the crypto market, in my opinion, especially right now with the way prices are. It's so cheap to buy stuff. You can buy what are called leaps on the stock market, which are just long order calls, which go for like 1 to 2 years. And the reason they call them leaps is because you're taking a leap of faith.
Okay.
And I have a bunch of those on different stocks right now. And the reason I do that is because when I look up a company, I see that, you can buy leaps for like $1 per leap, which gives you controlling of 100 shares, but you don't actually own the shares. You just have the right to buy and sell those shares at the current market value. So if I think that a company,
like cryptocurrency. Same way.
Something like that, but only you're controlling 100 shares of a company, but you don't own the shares. You own the leap, but you don't own the shares. Mm-hmm. So when you do that, you're expecting the company to at least go up a couple of dollars. Like my leaps are for like $5 a pop, and I have probably 16 of them, which gives me 16. This is for one company though. Gives me like 1,600 shares that I technically control. And I'm like, okay, that's not too bad, and it only costed me like $19 is what it costed me at the time to get those 1,600 shares. So when you think about it, and the shares at $2 a share, how much would that 1,600 shares have costed me if I would have just held it long as an actual shareholder? So I'm getting it pretty much on discount for a penny per share.
Okay.
And if it hits the strike price, which when you're talking about calls or leaps or whatever, it's always the strike price is what it needs to get above before you start making money. So when it gets to that strike price, then I start making money. And the person that sold me that leap, they make money up to that strike price. So like if I own 100 shares of, for instance, the company that I've been talking about for the last couple of weeks, Sundial Growers, which is a cannabis company based in Canada. Anyways, if I bought 100 shares of them and I sell one call that doesn't expire till 2024, that would be considered a leap, Okay. And if I set it at $5 and I bought those 100 shares for $2, well, so you got to also think about how much does it cost you to sell that, right? If I bought 100 shares at $2 or $2 a share, that's $400, right? 100 shares. Right. So, right? No, yeah. Well, whatever. I'm terrible at math. Anyways, that's why I use a calculator all the time. I'm like, forget it. Yeah. Anyways, if then you have your premium that you get immediately when you sell that call. All right, you get that premium, and when a share is like going nuts, the premiums skyrocket. So that's when I like to sell calls, and then I like to collect those premiums. And generally, what I'll do is I'll buy more calls and I'll do it again. I'll buy more shares and I'll sell more calls, and I'll keep doing that 5 or 6 times until I have a huge amount of money invested in that, and I've done it tons of times. But the thing that you have to remember is that you're only getting the premium when you go to sell those shares, whatever you did. Like if the share price, you bought the share for $2, all right? So when you do the calls, you don't want to do a 50-cent call. You want to do a $2 call because that's how much it costs you to buy those shares. Because if you do a 50-cent call, then if the call gets exercised, you're going to lose $1.50 on each share that's sold. So you'll lose $1.50 on that $2 call that you just sold for 50 cents per share. Even though, the strike price might be high, and it's highly unlikely that that call is going to get exercised, you have to remember that if you do a 50-cent call and the strike price is $5, that means that the 50-cent call you're going to sell those shares at 50 cents a share, and you bought them at $2 a share. You're here to make money, not to give money away for free. Right. And that was a mistake I made when I first started doing calls.
Yeah, it sounds like that would be a beginner's mistake, actually.
Yeah, when I first started doing them, I was selling them, I was doing 50-cent calls, but the shares were costing me like $1 or $1.50 or something to buy, so I was losing $1 to 50 cents every time I did a call and that's per share. So, so I'm losing half of my value in doing a cheap call to try and make a premium. So pretty much in the end, I was breaking even or maybe gaining $1 or $2 or losing $1 or $2. And that was my mistake. And now after a while of doing it, I've wised up. And the whole reason that people do calls or puts or whatever it is because they want to get those premiums. But the attractiveness of calls isn't the premiums. It is the fact that when you do a call, you have the chance, if it doesn't get exercised, and it's what they call out of the money, which means that the call didn't hit the target price to be exercised. If it's out of the money, you have a chance of getting that call, getting all those shares back. And guess what? You get to keep that premium. And that's where people make their money, is by making sure that they get those shares back. If the call gets exercised, then you're probably not gonna, even if it's out of the money, people will still exercise to try and get some of their money back out of selling those shares, and just recouping part of their premium pretty much is what they're trying to do. But if it doesn't get exercised, you get all those shares back that you just did. And that's what I try to do, is I'll try to use that premium, especially when you know you're selling 10 calls and making $2,000 in premiums, and you go off and buy 100 more shares or 200 or 300 or 400 more shares or whatever it is, and then you do it again, and then you're getting another 2,000 and you're doing it again, and then you're hoping that none of those calls get exercised, so that way you can turn around, get all those shares back, do it all over again, and then on the second round is where you'll be making your money.
Okay. Now, that's an interesting strategy. Is that something you can do with cryptocurrency?
No,
Okay, why not?
because they don't have calls or puts or options. This is all on like the stock market, and it's under the options trading, which is
Okay.
a call is you betting that the price of something is going to go up.
So,
A put is you betting that the price of something's going to go down.
do you think that'll change to where the cryptocurrency market is doing the same
if
thing?
crypto ever gets regulated like the stock market, I could definitely see that, and I'd definitely be down for doing calls and puts on the cryptocurrency market
Okay.
once it's regulated like that. But I don't see it happening. Like, you can't do that on the OTC market, to my knowledge.
Mm-hmm.
And then there's even some companies on the market, on like the stock market, that you can't do options for. It just depends on what that company wants to do. I'm not sure if the company has a say in the options or not, but I'd imagine that they do, since it's their share price that might be affected by those options.
Okay. Now, a while back, you said that cryptocurrency really relies on what I forgot what you called it now, to pick the cryptocurrencies, the strategy.
Volume.
Not volume so much, the sentiment. That's it.
Yeah, sentiment. Yeah.
Now, can you tell us real quickly, because we've only got a couple of minutes left? Can you tell us real quickly how can a beginner understand sentiment to be able to use it?
Well, it's just based off of what people are saying, you know. If somebody's saying, I hate this stock, or I hate this crypto, or, you know, this crypto is going to crash, that's considered bad sentiment. One person saying that versus 10 people saying that it's a good crypto to invest in is, you know, you got a 90% good sentiment, 10% bad there if you're taking a sample of 10 people and what they're saying, you know. So it's depending on what people are saying, but you're just not taking that from like one or two different sources. You got to go visit different websites with different forums to figure out how much sentiment, how much good and bad sentiment is out there, you know.
Okay, so you're basically relying on what other people think then.
Yeah, when you're doing sentiment trading, yeah. And that's why I mostly discourage sentiment trading unless you have a good understanding of just not the sentiment, but the stock market or the crypto market as a whole. You need to have an understanding of what's going on with that crypto as well to be able to trade effectively just based off of sentiment. But sentiment is something that day traders will do. All right, so day traders do sentiment, and then when sentiment's good, they'll buy a stock, wait for it to go up a little bit, and then they'll sell that same day, trying to make those gains. And sentiment isn't something that you do when you're going to hold something for a long time.
Okay.
Sentiment is more for short-term trading.
Okay, listeners, that wraps up our show today. We hope you enjoyed our new show, and we really want you to tune in next week when we continue to explore the world of cryptocurrency. So have a great week, and remember, don't take any wooden crypto.